how to buy good multifamily property deals 30 or 40% below market. If your goal is to find properties that are 30 or 40% below market, you're not alone. Right now, you might look at the market and say, Jeff, everything is overpriced. Trust me, I believe it. And you're not alone. You see, a few years ago, I used to have this listing from a seller, and to me, the price it was ridiculously high for a fourplex. But what I came to realize over the years is that most investors were still paying for a property this high without really understanding what is going on behind the scene. They have no access to data, they have no access to real research, they have no access to understanding how the market works. Until I found a way to actually get me properties that are 30 and 40% below market. Now, when we say below market, does not mean below asking price. It means below replacement cost. Now, replacement cost means the cost it takes you to buy the similar property for a brand new building. So it doesn't really matter what the asking price is. What matters is what you are paying at the end of the day. So as an investor, you want to buy a property or a multifamily property that is not just discounted, but is below replacement costs, at least 30 or 40% below that value. Now, there are three things I've learned over the years, and I'm going to share those three secrets with you. Number one is always look for motivated sellers. You don't want to go into a deal with a seller that is not ready to sell or motivated to sell. How do I identify a motivated seller? Listen, a motivated seller is found by sellers who have listings that have been in the market for months. I mean, real months, minimum of 90 days or 90 days in the market plus. And those sellers, not only have they been in the market, the listings have been over 90 days, you see the sellers have reduced price multiple times. That is a trigger to me that tells me this seller is motivated and is eager to sell. That's number one. Number two is this. I want to use data because the sellers cannot argue with the data. If the data shows that the pricing or the asking price is overpriced, there is nothing they can do. They have to meet up to your demand. And that's what is key for a seller. You as a buyer want to have access to real data that tells you what the asking price is, what the real value is of the property, because you want to go and purchase the property below those asking price. The third thing I'm looking out for is that I don't just do this by my own physical hand. I use reports, and those reports are used by tools that help me identify these real gems in the market. Why? Because it's all about data, and that's where InvestFusion steps in. With InvestFusion, guys, I don't have to do the heavy lifting or to pull the trigger. Only when I am 100% sure that one, I have all the chips in my hands. And that's what InvestFusion does. Let me demonstrate to you how InvestFusion really do find you properties that are 30, 40% below market. Let's go. All right, guys, so here we are logged into InvestFusion, and this is the property analysis dashboard. Now, there are two ways you can actually get an output. One, you can either impute a property you have been searching or been looking out for, and you want to have InvestFusion do a deep dive, a deep analysis for you, and let you know if it's worth going ahead to buy or to stand down from that property. Or you can allow it just do its thing, and then it gives you an output of all the property that meets its over robust 35 built-in criteria that actually sort through all the noise in the streets and identify properties that are a minimum of 30 or 40% below market. Incidentally, the property output is going to give to us is over 90%. Actually, specifically, is 90.01% below market value. All right, so let me put in this property. Here I have the address. Give me a second. Let me enter this. I'm going to just pause this video and enter this report. Give me a second, guys. Let's quickly do this. So as you can see, I'm back here. So here I am, guys. The property in question, as you can see, 5 Lake Center, Value Add Regional Center, 308 South State Street. Once I hit the Analyze button, InvestFusion pre-populated and gave us all this output. Now, what it does is to look at all the data points. Like I mentioned earlier, it has over 38 robust data points it uses. It's more like a deep research to identify all the key metrics that gives us either a buy decision or a sell decision, or purely basically not to even go ahead and purchase this property. Now, look at what he has given to us. We have, first of all, is the financial matrix. So it starts with that to give you like a raw data analysis of the property itself, if it has built-in equity or if it doesn't. Now, this property itself, it says the price per square feet of this property is $20.81. Now, listen carefully. The market price per square feet is 210, meaning in simple terms, every other property within that same region, that same zip code is actually selling for $210. InvestFusion just found you a property in that region for $20.81. That's a discounted property in terms of numbers, over 90% below the market. 90% below the market. The net OI, the net operating income, this property is generating cash flow. So that's already done. The net OI is NOI is $354,000. Now, the price of this property is $4 million and the cap rate is 8.85%. Now, let's look at the tenant information. So this is a property that is classified into the commercial range. So it also has, while you can look at some properties as being multi-family property or mixed use or commercial, it all depends on the unit in size. For this property, we can categorize this into commercial because of its mixed use range of properties itself that it has. Incidentally, it has over 19 tenants that are in this property itself. So the tenant count. So InvestFusion goes a step further and gives you the tenant count in this property. And it identifies or filters out single tenant property. It's only look out for properties that have multi-tenants. So even if a property has a single tenant, which you're tracking, is going to let you know that this is a single tenant and it's going to give you its own recommendation based on what it finds. Now, the occupancy rate is 39.9%, meaning that this property has a lot of vacancies. I will say almost 60% vacant. Now, two things comes here. One is the fact that, to me, for this property, it's either the listing broker is either not active in the market, or there is something going on with the property itself that the listing broker is not able to identify, which means this property might be likely mismanaged. And that's where my cue comes in, because for you to find gems, for you to find gold mines in the market, likely the owner is properly mismanaging this property, or they don't pay attention to the value of the property itself and just let it sit in the market without doing anything about it. So it can be a rare gold mine for you to go in and then do some reevaluation. But let's go on and see what InvestFusion says furthermore about this property itself, and then we will take all our matrices and then give a summary of what we think either to go ahead or stand down from this property. Now let's move on. Now, the early termination right, it says no. I did a video about early termination rights. I've explained that extensively. Maybe you can watch the other videos on this, and then I will give you an idea of what it is as well. So now, when you go below this, you have all the tenants. Remember, we have 19 tenants. So these are the names of the tenants. You have Fairmount Foods, you have Durham Sports, you have 3M. Let's see others here. You have Walmart, okay? You have New China Buffet, you have Exit Realty, you have Heretic Inc., you have Social Security Administration, Mayo Clinic, USPS, Scooter Coffee, Shoe Sensation, Sterling Pharmacy, Fairman Workforce, and Dollar Tree. So a host of tenants. It's a great mixed use of tenants. You have some national, global, national, regional tenants here, all part of the tenant mix. Remember, this property is priced at $4 million with over 19 tenant counts. Now, let's see what InvestFusion also gives to us about the location and its demographics. Now, based on location, the first most important matrix is the household income. This property's household income, according to InvestFusion, is $96,773. The US national average is $75,000. Now, this tells you that this property is located. That's why I said earlier that it must be mismanaged. This property is located in a location where the average household income is higher than the US average. What that tells you, in essence, is people within or those who live within that 1 mile radius or zip code area have disposable income. And look at what InvestFusion says. It says the population within a 1 mile radius is 13,944. What that tells you is that that region of over 13,000 people have disposable income of over 96,000. They have more income than the average US, above the average household uh, income that is given that investors usually have. So you have investors who have disposable income. One, why is that important? Because they can be able to pay their rent. The buyer of the property is guaranteed. You have that assurance that your tenants are doing well financially. It means that they'll have access to funds, they have access to being in the property for a longer period of time, and they can maintain the property for you. And of course, most importantly to you, the buyer, is that they are willing and able and capable to pay their rent. Look at what it says there under location. It says this property is in a high visibility area. So the answer to that, it says yes. And of course, above US average, the answer as well is yes. Now let's go further down and see what output InvestFusion provides. Now, this to me is the most important output that InvestFusion will give to you, and that's the risk assessment. Listen, when you buy a property, and because you're going blindly in most cases. When you go and look at regular listings, Zillow, LoopNet, Crexy, just name it, any listing out there, any service out there, you're going in blindly. Why? Because you do not know for a fact what is happening, what is the condition of the property. You only have an idea when you go in. And of course, in most cases, the listing broker is supposed to disclose any material facts. But the reality is, they really do not disclose those facts. And you, the buyer, you are left at the mercy of your due diligence period. But it's not free, because your due diligence period is a negotiable, non-refundable fee that you, the buyer, pays to the seller. And it goes anywhere from $5,000 to over $10,000. So would you use a tool that does the heavy lifting for you, save time, lets you know the property's condition up front before you pick up your phone to call a broker or talk to or discuss further steps with the listing broker? All of that can be done by utilizing InvestFusion. It's not saving you $100. It's not saving you $200. It's going to save you thousands of dollars upfront. And that's it. Just simple and plain. It's saving you thousands of dollars upfront. And don't forget that by the time you decide to spend that amount of money, you're also going to put down inspection fee and an appraisal fee. That's another $1,000 to $2,000 upfront that is going to go off your pocket just for doing all of this. And that's why I say, investors, before 2025, everyone not utilizing InvestFusion is going blindly into a deal. It's that simple, friends. And that's how the market works. So for you, you have a tool that lets you know the risk assessment. So what is the risk assessment of this property? It says environmental condition, good conditions. Land lease, no. Property damage, no. Foundation issues, no. Property violations, no. Now look at the tenant mix. And then it's going to break it down based on their occupancy, based on their profitability, based on their income. One thing again I have to let you guys understand is simple. InvestFusion looks at the tenant's financial history. Think of InvestFusion as that tool that goes into the data and reads the tenant's 5-year financial history, their rent paying history, or what they call the age receivables, their financial history. So if the tenants have filed any documentation with the SEC, they have any filings online about their reports, their financial reports, how they're faring, what they're doing, everything, InvestFusion captures that and begin to dissect it and understand if they are profitable or they're not profitable. Now, for smaller tenants, it might not have all of those reports, and it's going to flag it for you and let you know what you, as a buyer, if you decide to go ahead with a deal, what you put your energy on. But before you do that, already you have saved yourself thousands of dollars in due diligence fee that you would have gone blindly into buying a property that you don't even know if it's going to cash flow, if it's worth buying, if it has good potentials. All of that, you do it blindly. But with InvestFusion, it does the heavy lifting. What will take you months, and even with months gone down the drain, you still will not get half of this data at your fingertips. And that's what sets it apart light years and gives you an unfair advantage. This is your edge to mastering or commanding both multifamily properties and commercial properties, all at the tip of your fingers. So now let's move further and let's see what's 3M. So it gave us 3M and it says 3M is profitable. It breaks down their numbers, guys. This is how InvestFusion works. It gives you the numbers 2021, 22, 23, and then 24. For tenant Walmart, you see Walmart, it says profitable. It breaks the numbers as well. You have it 680 million, 648 million here, 611 million, and $572 million for Walmart. For New China Buffet, it says not profitable. Exit Realty, again, not profitable all the way down. So you have these numbers, you have this data, you have this exposure. You know what you're dealing with. You have this information. This is not found anywhere else. That's the huge benefit. So you're fully exposed. You know what's going on. You're not going in blindly anymore. You know what to look out for if you're going ahead with that deal. And you know what tenants you want to ask certain information and what information you need from the tenants if you're going to go ahead and pursue this deal. Now, so you have the last, of course, is Dollar Tree here. Again, it says not profitable, and it gives you the occupancy of Dollar Tree as 5.31%. Now, there's something that you need to understand. When you use InvestFusion, the first criteria benchmark it gives you its raw data pool or analysis from what is found on this property itself. It does its own due diligence and does its own research. Now, it gives you its own recommendation. How? When you click on Get AI Investment Analysis. What that means in essence is you're telling InvestFusion, go ahead, you've done your 38 plus points, deep research, touch points. You've done the heavy lifting. You've just saved me time. You saved me months of research. You saved me heartache. You saved me pain. You saved me potential or possible litigation fees, which is possible in this market. It saves you all of that. And then you ask it, give me your recommendation. And that's what it does for you. Now look at its own recommendation on this property here. Summary, it says the property has a strong cap rate, 8.83%, and is priced well below market value. Remember, I told you 90.09% below the market. But it says suffers from low occupancy. Yes. So here you have it, guys. You've seen how InvestFusion has been able to identify a property that is automatically 90.09% below the market, not 10%, not 20%, but over 90% below market. Amazing. And a great deal, just understanding all of this. See, in real estate, you don't get paid by working hard. No, you get paid by finding the right deal. And the right deal, you want a deal that is discounted to the market. Like I said earlier on, you want a deal that not just discounted, but you want a property below replacement cost at $20.18 compared to the market rate of over $201.38. This property is 90% below everything else out there in the market. That tells you how huge it is. So if you're really serious about real estate and you're really to take this to the next level, you have to understand that with InvestFusion is the way to move forward in 2025 and beyond. So what I expect you to do right now is simple. Make sure to subscribe to our channel. Every Tuesday, every Monday, Wednesday, and Friday, we'll be giving out much more content like this. If you have any comments, you have a property you want us to do a deep dive on, or you want to understand how this works, give a comment down below, and then we'll be able to reach out to you. Listen, in life and in business and in basically in everything you do, you want to do it the right way. And with InvestFusion, it takes up away all of those hard work, those pain and heartache you would have had just doing things the wrong way, but gives you light years. Even as a beginner, you don't have to be an experienced, savvy investor to understand this. Even for brand new beginners, with InvestFusion, you gain access to tools like this, and it can help you change the way you look at the real estate markets. Thanks for watching. I'll see you next time. Bye for now, guys.